Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from Hong Kong at SmartCon 2024 by Chainlink. Joining me for this segment, we have Marcel Kasumovich. He is Deputy Chief Investment Officer at Coinbase Asset Management, and we're here to discuss how blockchain technology is helping to advance the digital payments sector. Marcel, it is great to have you with us. Welcome to Trade Talks.
Happy to be here, Jill. Thank you.
You got it. And you know, I love talking to people like you who have a long history working in the financial sector. What drove you to step into the blockchain space?
Efficiency. I'm a financial plumber by curiosity and by training. And when you really study the architecture of blockchain technologies, you see things can be better, cheaper, faster. And that's a very exciting proposition for a monetary system that's functional, but can be a lot better than the way it operates today.
Yeah. What do you think are some of the key regions where you're seeing innovation within blockchain technology right now?
Look, I think the U.S. has fallen a bit behind. From a talent perspective, the U.S. is exceptionally strong, but from an innovation, so the innovation is still prevalent there. But from a regulatory standpoint, I've relocated to Abu Dhabi, specifically because they're on the regulatory side, not easy, it's difficult, but they're forward thinking. There's a pathway to commercial ideas coming to fruition. I think you see it in Hong Kong as well, where you now have a very clear pathway for managing digital assets within the Hong Kong regime. You're seeing it with stablecoin within Hong Kong as well. So you're globally you're seeing this natural push toward more integration of blockchain technologies into the regulatory mainstream, and I think that's gonna be required for these to scale.
Yeah, I would imagine too in places like the U.S. and other Western banking institutions, because there are legacy agencies and so forth, there's just a lot that has to be worked through, and hopefully that will progress sooner than later. Because I want to understand how blockchain technology is helping to advance the digital payment sector.
So let's think of the speed at which you can operate on digital rails versus traditional rails. The single most important factor that you'll see with a stablecoin as a payment tool, for example, is its velocity is incredibly high. That is, the number of transactions that can be facilitated by a certain amount of assets is much higher than in the fiat world, 25 times higher, maybe 100 times higher in instances. So you need less money to do the same amount of transactions. So those types of efficiencies are derived from the fact that settlement is instant and final. So if you and I are trading instant and final, that means you and I can settle our transactions faster. We can settle them at any point in time of the day. That means you and I need to hold fewer cash balances. So that would be an efficiency gain that would allow then companies or individuals to then reallocate their excess cash into more productive uses. Yeah. So those are the simple, very simple efficiencies that we've already realized. These are things that are already being evident in the market, despite regulatory frictions and regulatory challenges. So it's a really important source of efficiency.
I would agree with you there. Let's talk about real world assets, also known as RWAs. I mean, certainly a hot topic this year, and it's something that I would expect we'll cover here at SmartCon quite extensively. How big of an impact do you think RWA development is going to have on the global tech, finance, and blockchain sectors? Because there certainly is a convergence there.
There certainly is a convergence. I think it's incredibly important. I think the single most important thing is to start simple. So there's a great excitement, real world assets, blockchain technologies. Okay, let's go let's tokenize the Burj. You know, let's dream really big, the Eiffel Tower, whatever it may be. I think you start simpler. You start with things that are shorter duration. You get people comfortable with how the technologies work. You get them comfortable with how wallets work, how transactions clear, the architecture that's needed from a regulatory standpoint to allow that to happen. So the real world asset movement, I think, is real. I think it just needs to start at a simpler place. We're aspirational right now, which is terrific, but I think you need to start simple and really execute on very simple grounds and then build from there.
I'm glad you brought that up, because even with TradFi, we have all these acronyms that kind of go with the assumption that everyone knows what we're talking about. So what do you want people to know about this industry to help simplify it a bit, that they may not know, and to help them understand what's so important about this emerging technology?
I think engage. I mean, if our rule of thumb, so we have a tokenization platform that focuses on institutions, and we're doing all sorts of real transactions, but in very, very controlled form. And our experience has been it takes 3 tries for institutions to get comfortable. The first try is, oh geez, this is all new. How does this work? How does the wallet move? How do I verify the transaction on the blockchain? The second one, a little less hand-holding. By the third time through, they can see it. Now, the critical thing is they need to see it again in very simple form. So if we're sending dollars to one another back and forth, that's a very simple transaction that they can see how the system works. Then they can migrate to a short-term loan. Then they can go further out the risk spectrum. But by keeping that duration very short, the risk that they're taking is very short. It gives them a lot of experience, a lot of reps to get comfortable with how the technologies are working. So I think engagement, learning by doing, is a very, very effective way of then understanding what tools you need to support how you're going to implement this into your portfolios or into your financial system.
Yeah, and that's what I think is so interesting and why I think this space is maturing as rapidly as it is, because we're talking about user experience now, right?
Absolutely.
It's no longer, a concept or, it's just the ethos of blockchain. There's integration going on, and once it comes down to user experience, you just want to get from A to B.
Mm-hmm.
That's when it feels like things are maturing a bit.
Well, this is kind of interesting. So let's look at PayPal as an example,
Right.
which is an example I always like to come back to. So PayPal's a recognizable brand name. They've also introduced crypto rails into their mechanism for paying and moving money around. Paxos runs that.
Mm-hmm.
So Paxos is the infrastructure rail. Now, all of a sudden you have this company that has brand recognition, where when I go to the app, it'll look and feel like an ordinary transaction, but the rails may very well be crypto rails. So you've taken this company that looks traditional, feels traditional, known brand, and yet underneath the hood, those could all be running on crypto technologies. Mm-hmm. So those are the types of integrations that I think we see more and more of those integrations, then people will stop thinking about, is this crypto? And they'll start realizing that, oh, this is just a better way of doing things. And the more user experience that we can get that's familiar to people and comfortable for
Mm-hmm.
people, the faster we can integrate into the mainstream.
All right, Marcel, appreciate the insight. Thanks for joining us on Trade Talks. And thanks for joining me from Hong Kong. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.